This is Jim from Portage M&A Advisory, and you're listening to the Selling Successfully podcast, the show that simplifies selling your business for those thinking about moving into the next chapter of life. If you like what you hear, please follow or subscribe to find us easily and listen again. We're here when you need us. Hi, everyone. If you've been following the Selling Successfully podcast, you've probably caught many of our episodes with industry experts related to both buy and sell side. One of the things we haven't really covered is the Portage story, how we got here, and what this really means to us in terms of how passionate we are about this space. Selling or buying a business, as you know, is a decision that shouldn't be taken lightly. It's one of the things that we really wanted to talk about in terms of how Portage got into what it is that we actually do. Excited to have Ryan with me again. Ryan, welcome to the show.
Thanks for having me again.
Given that you've been here a few times, we can definitely call you a regular at this point.
Yeah, I feel like I've been here a lot of times and I'm glad to come anytime.
We're rolling into 2024 with more clients, more team members, and more office space. 7 years ago, we started with a much more modest team of 4. We were housed in a much more modest office space, I would say, in Niagara-on-the-Lake in Ancaster. We had just a great, passionate crew, but there's been significant growth over the past 7 years, which I'm really excited about. I would say one of the things that we added was a leadership team. We now have 3 VPs, yourself as a partner, and much more office space being constructed. Ryan, why don't we talk a little bit about your journey at Portage?
Sure. So in 2021 is when I first joined Portage. Really at the beginning, I was the VP of the Valuation division. As things grew, the next year I became partner, and we just continued to grow out that valuation division and just grow the entire team. And I think, when I started, I probably was the 4th or 5th, and we're going to have 20 within the next couple of years. Right now, we currently have 14 people.
Yeah, and I think, like most business owners, I think our growth has been very organic. It's been driven by a lot of the great work we've found being referred to us, and really excited to add more office space and be able to do more of these deals. Besides our passion for educating business owners on navigating the very, very important sale process, I think what really gets me up in the morning and gets me excited is this segment, I would say, that's underserved, that sometimes we refer as the white space, or more commonly referred to as the lower middle market. Would you mind just talking to me a little bit about how we define lower middle market and try to make it practical for those who are listening so they get a good understanding of our target market?
Definitely, I can do that. And it really depends, honestly, on the location you're situated in. The lower mid-market, where we are, more of the GTA areas, is probably that $1 million to $5 million in EBITDA. So businesses that sell for probably $4 million to $30 million range, that's kind of where the lower mid-market. If you're, say, for example, more on the East Coast, of Canada, that might go down a bit. You might be more in that 500,000 of EBITDA to maybe $3-4 million of EBITDA. So it really does depend on location, but it really is an underserved market, because really what's happening is a lot of the investment banks don't want to play in that space. They want to play in companies that probably have $5 million in EBITDA and above. And so they're not really guiding a lot of business through that sale process if they are below that threshold.
Right. And I guess just to add a little bit of clarification here, we're talking about serving folks across numerous industries. We're talking about size of business specifically, right? And same with location and region. Again, as you mentioned, we're located here in the GTA, but we do operate, I would like to think that our reach in terms of buyers is global, and many of the sell side mandates clients we work with, are a little more local, Ontario based.
Yeah, exactly. And really, the way we started, it's a really good story, and I always like Jim to tell the story because it really came from a passion of his, and also because his father was trying to sell a business and there was some difficulty in trying to sell that business. So I'll let Jim kind of tell that story of how Portage really started and why we're in this market.
Yeah, I mean, it's really interesting. When I talk to a lot of business owners, oftentimes there is a particular situation that brought them into business. Maybe there was a need in the market, maybe it was a situation that made them aware of a gap out there. And I think it was no different for me. At the end of the day, I was working in a larger accounting firm. We were looking at opportunities to help customer experience. We're looking at different service offerings. One of the things we noticed in particular was that when it came to business owners exiting their business, there were a few different options, but not all members, within the firm, not all clients were taking advantage of it. And there were reasons for it. Oftentimes in the accounting world, the bread and butters, the tax planning, some of the advisory services, and that sort of thing. But what I found was there were a lot of clients who were getting the support they needed to grow their business. And when the time came, there was a segment within the accounting firm that just wasn't getting the love and attention that they really needed. And oftentimes, and this is not that uncommon. It's not one firm in particular. It is just the natural and common way of how business is done. You're going to focus on the big fish. Smaller businesses weren't given the love and attention that they really deserved. They had more junior people on the deals. And as a result, many of those, let's call them, smaller, less profitable clients weren't able to retire successfully or exit their businesses. And that really, became obvious to me. I had a personal situation, as you mentioned, where I grew up in a family business. My dad would be considered in that lower middle market segment. When I tried to help find an advisor when I was out west, Dad's business is out here, it was really, really difficult. Accounting firms that had a corporate finance team didn't want to dip down and work with his business. It was too small. It was below that 30 million enterprise value. And, I think eventually I started thinking long and hard about how many people out there are like my father, who have businesses that drive our economy. And at the end of the day, what is their option for retirement? It really boils down to selling their business. He doesn't sell his business, retirement looks very different. And it's very impactful, not only to my father, but, if you think about the workers, you think about family members within my family, you think about the economy, there's huge implications of not serving that segment. So that's really the impetus to me moving into, the lower middle market and founding this firm 7 years ago. Whether you're looking to buy or sell, there are very specific reasons why your advisor should be focused in the lower middle market. Oftentimes what we see, and Ryan, you've seen this numerous times, folks will dabble in the lower middle market, but their meat and potatoes, so to speak, is in the mid-market, which is kind of that 30 million and above. And let's talk a little bit about why it's important for your M&A advisor to specialize in the lower middle market.
Definitely. There's lots of reasons why you would want your advisor to actually specialize in that area. Probably key is they have a buyer pool in that area. So a mid-market team usually has buyer pools of people that want to buy businesses 30 million and above. Well, for us, for example, we're in that lower middle market. We have buyers that want to buy 30 million and below. It's just like why sometimes we have a client that might reach out to us and say, I have a business for sale. It's worth $1 million. We might say it's not ideal for us because we won't have buyers in that space. So probably one of the key things when you think about it is, are they going to be able to find someone to buy my business? And then on top of that, there's just different complexities when you're dealing in the lower mid-market. There's, the accountant financial statements are not always as clean. There's a lot different add backs. There's a lot of times the owner is really dependent on that business running. And it's not like the mid-market where maybe there's a CFO, a CEO, someone that can run that business after a sale. So it's just it's a different beast. And therefore you really want that person to specialize, and that's all they deal with when they're selling businesses.
Yeah, it's a good point. I mean, there's a lot of information about the mid-market, and I would say the upper market in general, especially when you think about what business schools are teaching, you think about the content out there on LinkedIn. a lot of the times the focus on large publicly traded companies where you get perfect data, right? We work in a zone with privately held businesses, oftentimes owner managed, and it's very much relational. It's not transactional. As you move up market, oftentimes you don't even know who the shareholders are, especially if it's publicly traded. We're talking about a very, very different process when you're dealing with a seller, and oftentimes families involved too. It's a very, like you mentioned, it's a very, very different dynamic. And if you can imagine and appreciate, the buyer looking in this space will be very different than someone looking at a Google or an Amazon or some of these other marquee companies. I know it's a bit of an extreme example, but it is a very different type of buyer.
Yeah, it definitely is. A lot of times the buyers, well, they are sophisticated, they're not as sophisticated. So they might need a little bit of our guidance as part of the actual purchase. Whereas you get to the mid-market, less and less. They have teams, let's say it's a strategic buyer, they have teams that have done numerous transactions. In our space, it might be the first time that a strategic buyer has ever purchased in this industry. So we really do have to guide them through that process. So even though we are working for the seller, we are assisting that buyer with the whole transaction, making it sure it gets to the finish line. That's really our job at the end of the day. Let's make sure this is a nice, easy transaction and that everything goes smoothly and that we can truly get this business sold and that legacy of that business will continue.
Yeah, and you talked about complexities. I mean, at the end of the day, retirement really boils down to what they're going to get for their business and how it was planned and how it was executed. And so you want to get it right. And you mentioned, I mean, there are significant things that one needs to be aware of that are different in the middle market. They don't have, oftentimes there's no CFO on staff. They're highly dependent on their accountant and their accountant's planning. And I would say one of the greatest success factors at the end of the day is making sure planning has been done well in advance. Those pieces aren't always in place. You want to make sure that the advisor is taking a look and making sure that the timing makes sense and that all the critical elements such as tax planning strategies, preparing it for transition, all those items are in place. Without those items, you could be leaving money on the table.
Yeah, exactly. And truly, a mid-market company probably has a lot of those things in place. A lower middle market, a lot of times, sometimes they do, a lot of times they don't. And we can really advise and help someone guide through that whole process.
We talked about having the right people around you in the form of a deal team. I want to pivot here and talk a little bit about an M&A advisor. We have some folks who will go it alone, will try to be that M&A advisor or sell it by themselves. And then there are other M&A advisors out there who run different approaches. I'd like to really touch on, what makes a great advisor great? What are the sort of things that they should be doing? And what do we commonly see, the pitfalls of not hiring a great M&A advisor?
Great. So I'll jump right into the pitfalls because a lot of the pitfalls will then say what you need to be a good M&A advisor. So some of the big pitfalls is, a lot of M&A teams might not have a great valuation component to their actual practice. And the problem there is you go to market with an improper price or you set the expectations at the wrong area for the actual seller. So you might say to your seller, hey, I can sell for 10 million. Realistically, it's a $5 million business. That becomes very difficult for planning for your retirement and for a lot of other issues down the line. Also, when you're running a true process of selling a business, you've got to make sure that your marketing material, which we would call your SIM or your teasers, is really strong to highlight all the strengths of a business, right? So if you kind of do it yourself and just say, here's my financials, it's not telling a buyer what makes that business special, what makes that business unique. Whereas a good M&A advisor can really dig into everything that makes your company unique and sell that to the buyer and let them understand how they can run this business going forward, right? So you'll see what happens a lot of times is someone might hire what we call a broker that just throws the company up on a website with maybe a number for what the business is worth. That's truly not doing a service to that actual seller. You really don't want to have a price when you go to market. You want to be able to try to get that highest price possible. And by having all the proper marketing material, having the proper data, having all the information that a good M&A advisor would do, will really get you that highest price. Will also make sure that you're saving the most amount of taxes that you can save. You're going to be looking at all those things. And it's really going to help with everything. Negotiation. Listen, nobody sits there and goes to school if they're going to be a tool and die company to negotiate a sale of a business. A good M&A advisor, that's what they do. That's their living. So they're really going to be able to help negotiate the entire deal. It's not an adversarial thing. You're not yelling. You're not, pushing back with mean words. You're actually working with both sides to make sure that whole transaction goes smoothly. So
yeah, and when I think about the key elements of an M&A advisor, I think there's the idea of building trust, there's transparency in working with facts and setting realistic expectations. Because oftentimes what we see is individuals come to us and they say, listen, I was promised 10 million for my business. We went to market and I had offers for 5 million. And I think to myself, very, very unfortunate. Whoever did the valuation was trying to get the mandate. They weren't thinking about what was really practical. And I think that first valuation at the end of the day is really the starting point to everything. We know that buyers have limited flexibility, especially when they're getting financing. We know that the price point at the end of the day has to be relatively similar. Mid-market, very different. Folks have deeper pockets. Oftentimes, tier one banks aren't being leveraged the same way. Very, very different. So Ryan, you mentioned early on valuation being critical. And I would say, in my mind, it's an absolutely missed opportunity that many, many M&A firms will not get right. And what I mean by that is, oftentimes, M&A advisors are trying to get the mandate. What do they promise the seller? Something unrealistic. And, it may sound good that your business is worth 10 million, when in reality, it's only going to sell for 7, right? There's a lot of disappointment, frustration, and oftentimes it leads to a missed opportunity. And what I would say, from my perspective, being transparent up front is absolutely critical. And I mean, you've seen it many times, right? The buyer is putting an offer in. They are smart people. They're leveraging qualified business valuators as well. They're going to go to the bank to get a loan. What happens at the end of the day if the valuation is completely disjointed between buyer and seller? It's just going to break apart.
Yeah, exactly. A good M&A team will make sure that valuation is in line with for everyone. We know that when you go to market in the lower mid market, the price is not going to vary too greatly. So if we tell you, it's this price, we may be 5% low, and generally we get higher than the price that we would tell you that it's going to go for. But the problem is, if you don't set that price correctly from the beginning, everything's going to mess up. Your tax planning is going to be wrong. Your retirement planning is going to be wrong. Everything that a seller needs to know so that they are comfortable with the whole process. They're comfortable with their retirement. And if you don't have that, things can fall apart. You're going to get an unhappy seller. You're probably going to get an unhappy buyer because you're going to be pushing them to a price that definitely can't be doable. The financing from the bank just won't make it possible.
Right. So we talked about inaccurate valuations. We talked about incomplete information package, like the SIM. Why is that important? Like obviously it's a document that shares information about the business in particular, but how is that document used, and what are some of the things you typically see that aren't correct in it, or they're not painting, an accurate picture?
Sure. If you have a true M&A team, they're going to really highlight what makes this company unique. If a buyer doesn't know what makes it unique, you might as well just hand them financial statements. And at that point, they're just looking at a company and going, it does this and this, what can I do with it? So you really need to highlight that so somebody can understand what makes this company tick. Why do I want to buy this business versus the company down the road, right? So you're trying to give the idea or the picture, paint the picture of what is unique about this business. If you don't do that, we've seen it, there can be a lot of buyers that will back away.
Well, let's be honest here. If I'm a buyer buying a business, what am I looking for? I'm looking for a growth opportunity. I want to understand the business and the fundamentals, but I want to know how I can plug in as a buyer, enhance it, grow it, and make more money. That probably would describe 90% of our buyers, because we don't sell distressed businesses. But from the banker's point of view, again, very different perspective on how they use the CIM. Talk to me a little bit about what they do with the CIM and how they leverage the material in there.
Yeah, so bankers are definitely looking for more for risk, right? What is going to be risky about this business? Are these cash flows going to be consistent? What are the things that are going to make this something that we can lend money to? And so that a real good advisor will make sure that that CIM touches on those items as well. So a bank can say, yeah, we're comfortable with a lot of this information. And a lot of the information in that CIM is going to be, the commercial banker is going to use it to create a loan, but they have to send it to credit. We've filled out a lot of the information or a lot of the gaps that they need to present to credit so that this application or this loan can actually be financed for the buyer.
I would think to myself, customer concentration, supplier risk, some of the pretty obvious things. I mean, bankers like to get in there and make sure it's a bankable deal, right? And like you said, they're looking at the risk.
Exactly.
One of the other items we touched on very briefly is the marketing strategy and how to find buyers. And you mentioned, hey, some people put up on a website, but what does a marketing strategy look like? What should it look like?
So a lot of firms, you're right, do not have that true marketing strategy when they go to market. A good firm will make sure they're always, even early on in the process, are looking for buyers, trying to leverage buyers that they have in their database. For example, we have a massive database of buyers that are already ready and primed for certain industries. So that's what you're really looking for. Do they have that buyer pool? I mean, I'll let you touch a little bit on some other things, some other associations we are part of that can help with that buying process.
Yeah, and I mean, just to really define who a buyer is, I think early on in the process, we're defining who a good fit for that business would be. It could be a strategic buyer, someone already in that business, so to speak, who could be a perceived competitor. It could be a high net worth individual. It could be a private equity group. And obviously defining who that target buyer is, who a good fit is critical, right? And then secondly, when you're talking about a marketing strategy, we're talking about where do you find this buyer? And that's why we joined Cornerstone International Alliance, which is specialists in the lower middle market, M&A firms. There's about 30 similar to us across North America and beyond who will share different intel on buyers. If we've got, a manufacturing company, we can reach out to the gentleman in California, Alabama, Wisconsin, and say, hey, we've got a great opportunity here. Anyone in your network looking cross-border? And at the end of the day, I mean, it's hugely relevant to our clients here because now we're pulling in individuals from not just in our local region, but from North America. So it gives them more options at the end of the day.
And definitely, and I'll give a really quick example of why it's so critical that we have this network. We're in the process of selling currently a business, and we thought at the valuation, we tested the market, talking with bankers, we could probably get maybe a 5 times multiple on the earnings. We talked with some of our people in the States. They said, hey, listen, there's a private equity right now that's buying these businesses. You probably can get higher if you go to that private equity. So now we have a buyer already primed up that we think we can get a higher price than generally the market would bear. So it's really key to have these networks, to have this, to be thinking ahead of who that potential buyer could be.
Right, and there's lots going on, right? In our geography, we may not be experiencing a roll-up, right? We've seen this in audiology where there's a roll-up taking place, and had we not leveraged our network, we would have missed out for our clients. So I think understanding, markets that are hot, roll-ups that are occurring outside your region is highly, highly critical. Let's talk now about negotiation, because I mean, obviously this is something that is critical to the deal. I mean, there is a defined approach that we take. Can you touch on, what this looks like and why is negotiation so critical?
It's definitely critical in the whole process. Like we've mentioned before, we know that the price isn't going to have too much variance. And so a lot of times, yes, we're going to push for a high price and that's the goal. But a lot of times it's the other deal parameters that you want to make sure you're negotiating. How is the earnout, if there is an earnout? How is the VTB going to look? What other things can we negotiate that make both parties happy, but truthfully make our sellers the most happy? But It's really all those things that say, hey, we don't want to be butting heads. We want to make sure this is a nice process and it continues to, go even down the road. Because usually, a seller is going to stay in the business after the sale for a limited amount of time.
Yeah, and there's strong research right now that suggests that a collaborative approach is the best approach in this space, only because there's going to be a transition. Buyer, seller need to get along. They need to help one another. And I like to view this more as a partnership than a combative exercise where both sides are fighting really hard, tooth and nail, and hate each other at the end of the process. There's lots of negotiation books on how this new method is very successful. And one of the things that we do early on is we are looking for fit from the buyer, but we're also ensuring that we can bring the two groups together. Obviously, it's key that both parties voice, their primary objectives. What are they looking to achieve? And we try to marry them together. But it is a challenging process, but it's one that is also critical in getting the deal done.
Yeah, and just to speak to our team, we are a bunch of professionals. So when we come to negotiation, I think what sets us apart from some other firms is we come with data, we come with experience, we do come with credentials behind our name. So when we are in negotiation and someone wants to change something, we can say, no, that's not the way it works. We've had experience. We know how this works in the market. And we can have that little bit of pushback without being adversarial.
Right. I think facts do need to guide the deal. The facts do need to determine what the true price will be. It's not about tricking the other side or outsmarting them. It's really being transparent, honest, and integral throughout the deal. So Ryan, the last pitfall that I commonly see is a lack of deal structure. Typically, what I don't see in some of the transactions, and quite honestly, the reason that they don't get to the finish line is there's no project plan, there's no milestones, there's no qualified deal team in place. And, there's aimless negotiation back and forth. And quite honestly, oftentimes we get referred clients who are working with their accounting firm, and it's been a year or two, and they had a valuation on the table, they provided financial statements to the other side, and nothing has moved forward. Can you speak a little bit about this lack of deal structure and project plan?
A big part of our job is to really make sure everything moves along and progresses, right? You listen, a buyer is going to be dealing with a whole bunch of deals. So if they get the ability to push your deal back a little bit, they will, because then they'll concentrate on the other deal that's maybe getting pushed, right? So it's really integral that you have a team that's would be an M&A team, but also lawyers that are saying these milestones have to be hit, and we need to close on the day that was agreed to be closed. You have to push because if there's that opportunity to let things slide a bit, a lot of times it does happen.
And what I'll say too is it's not just always on the buyer side. They're oftentimes incriminated in these situations, but what I would say is you need someone to drive the process. You need someone to say, listen, seller, this is the process we're following. When buyers come to the table, listen, buyer, this is the process we're following, and we need to stick to our guns. And here are the rules of engagement. Here's what's in scope, out of scope, and let's stick to the plan. And like you said, sometimes buyers will look to take advantage of an unsophisticated deal structure or advisors that maybe aren't as qualified. But if the process is clearly defined, you got the right people, chance of success goes up immediately.
Exactly. I think it's just crucial for the whole process.
I guess in summary for this section, what I would say is if you're wondering, who's a good advisor, how do you verify them and that sort of thing, the easiest thing to do is ask sellers for references, talk to some of your trusted advisors, look at the different associations they're a part of. I think that speaks volume too. There's certain credentials one can look for, the CMAA, there's, the CPA, CBV folks that are specialized in the lower middle market in doing M&A. I think that's important. And then also look at some of the associations that they're involved with, like Cornerstone International. How are they finding their buyers? And what do the other counterparts look like? If they look like they're quality and there's some sort of verification process for them to belong to the association, that's important. But I always say, keep it basic too, and talk to some of the sellers that these folks have worked with and ask them what the process was like. How long did it take? Does it make sense, right? Were their expectations met at the end of the day? That sums up our Portage journey to date. We talked a little bit about our story, how we got here. We talked about how we specialize in the lower middle market. And as always, feel free to please reach out to us. If you'd like to get in touch with me or Ryan, you can contact us via email, jim.friesen or ryan.buist at portagemaadvisory.com, or you can find us on LinkedIn.